Hello, ladies and gentlemen. My name is Daniel Abok, the founder of Kidaftari. Today, my fifth episode will be covering why do we have debits and credits. So this is an interesting topic because it's something I battled to understand for over 7 years when I started learning accounting. And once I got it, it looked so simple. I wondered why I didn't have myself when I started learning accounting. So that let me just get on to it. So why debits and credit? So that's a big question. If you've been keen on my previous 4 episodes covering operations, balance sheet, assets, you should have noticed something I've been consistent with. One thing I've been consistent with is one with the one thing I've been consistent with is where use a different color. Where value comes from, and two, where value goes to. So in accounting and from my previous episodes, you realize that I mentioned this a lot, these two aspects a lot, these two perspectives of a record. Without them, there's no completeness in a record. So in accounting, you have to record where the value came from and where the value went to. And this basically is why we have debits and credits, to record those two perspectives. So generally, where the value came from and where the value went to. We use a different color. So where the value came from is credit. Where the value went to is debit. That's simply how I define debit and credit. They're just two aspects of a complete record. So I'll just put it up here. So debit and you have credit. And the explanation is this is where value went to. This is where value came from. Simply. So those two aspects of a record are identified by debit and credit. So a complete record has where the value came from and where the value went to. That's it. That's why we have debit and credit. So for example, you can use different color here. So it's a green. So in accounting, we have things like debit, a T table, where you have debit and credit. Remember, for every complete transaction, you have to have the record, two aspects of a record, where the value came from and where the value went to. So assume we are buying assets or we are buying inventory worth 1,000 in cash. So in this case, the value is coming from cash. Let me use a different color. In this case, the value is coming from cash. Cash. The value is coming from cash. And the value is going to inventory. So the cash, you're going to use cash worth 1,000 to gain inventory worth 1,000. So in that case, we have recorded a complete transaction. We have credited cash with 1,000 and debited inventory with 1,000. You have done a complete record in that case. So this is where you're buying inventory. So value just moved. That value really just transformed from cash to inventory. And that movement has been recorded by debit and credit. Another example would be if the owner is contributing cash, or the owners of the business have decided that they're going to take loan to fund assets in the business. So in this case, you still have debit and credit. So you're still going to draw the T table. In this case, if the owners are going to borrow 1 million, so the value has to come from somewhere. So the value probably is coming from a bank loan. And it's going to end up as cash in assets. So since the value is coming from bank loan, that's why it's on the credit side. And if it's going to end up as cash, that's why it's on the debit side. So the bank loan, you're going to take 1 million in value from the bank loan side, and this is going to end up as cash. So that's a complete record. We have shown that cash came from a bank loan that the business took. So that's basically what debit and credit does. It's just the term you use to record completeness in a record, where you have to have two aspects. A complete record has two aspects: where the value came from and where the value went to. That's it. And yeah, so I finished my episode. That's the end of my 5th episode on debits and credits. Hope to see you on the next one. Bye.